The Morgan Report with David Morgan.
David Morgan, themorganreport.com with the weekly perspective for the week ending 26 March 2021. Well, let's start with the stock market, which I usually do. The NASDAQ is actually testing the 50-day moving average from the bottom side. So there's been a drop in the NASDAQ, basis the NASDAQ itself, or the QQQ, if you want to look at it that way. And it's not struggling, but it is under some pressure. The semiconductors are definitely under pressure. The XLK technology sector ETF is, again, same as the Qs. It is testing the 50-day moving average from the bottom side. The Van Beck semiconductor doing the same thing. So we do have a lot of problems out in the economy, as we well know, and this semiconductor shortage that everyone's talking about is certainly a big player in today's high-tech world. This week, I want to start off a little bit with my Twitter feed, and certainly a lot of people do pay attention to it. It's basically news that I catch almost every day. Most of it is posted by me, but there are a couple people in the organization that can post as well. The Twitter handle is @SilverGuru22. You can see it there. I'm not going to change it. It's pretty easy to find. And these are some of the posts that I've done here recently. This one at the top is about the banking system and talk about how safe is your bank. There's some stress tests coming up here, and if they're honest, there'll be a lot of banks that don't pass it. This one is a very interesting article from Zero Hedge, which usually has some great information on when unallocated becomes unavailable. You can listen to that, of course, read it. And I started posting a lot of things about what has happened in the past with mints shutting down and failure to delivers that may have been overlooked if you're new to the sector. One of them is this Northwest Territorial Mint here in Washington State that failed. There's an article here you can read about. UBS was sued for charging storage fees for non-existent metal. There's an article at Seeking Alpha on that same thing linked here. And then Morgan Stanley is sort of the most famous one. They settled a class action lawsuit, paying $4.4 million to settle a lawsuit, and they were actually having a physical account and paying storage fees, and there wasn't any silver there, let alone being stored. So I just did an interview with Palisades Radio that is not posted yet with John Adams. John is from As Good as Gold Australia. I have a relationship with As Good as Gold Australia myself. I think they are probably the best. They are, in my opinion, if you are going to buy in Australia, and you can buy outside of Australia if you wish. So that one is something you might want to come up and take a look at once it's posted. And so I'll leave it there. I keep posting on Twitter, so if you want to know what I'm doing on a daily basis, that's probably the best place to go. Moving to the blog briefly, almost all the public stuff I do gets posted on here eventually, and usually pretty quickly, actually. This is an interview I did recently on The Big Short. And I don't think I said just days away, but a lot of people that produce these like to put titles that are referred to as clickbait. In other words, put a title up there that's going to get more clicks. But regardless, I made an analogy between what's going on in the silver market with all this demand and not moving the price up to The Big Short, where one of the major subprime mortgage lenders went bankrupt, and yet the market went against them temporarily. You'll know what I'm talking about if you watch the movie or remember the movie. Regardless, it is interesting times across the board. If you move over to Mike Maloney's website, goldsilver.com, you'll see that Mike, Jeff Clark, and myself just did a discussion yesterday or the day before on silver and gold, obviously, and whether or not the market bottom is in and what the future holds. You might want to see that. I thought we were all kind of on par for the day. I think we had a pretty good interview. Of course, that's my opinion, and I'm biased. I was in it. But nonetheless, something you might want to take your time to listen to this weekend. So the first article up is from Market Watch, Why the U.S. Dollar Continues to Rise, Define a 2021 Consensus Trade. Many have said, demise of the dollar, and I'm one certainly in that camp. Yet, and this article goes on talking about Eurozone having more problems with the CV and all this stuff. I actually put almost all of that aside, and I'll make my statement on why I think the dollar is beating everybody else. It's because of interest rates. You are getting negative interest rates at some of the major currencies that compete with the U.S. dollar. Do you want a negative 0.8% yield, or do you want a 1.6% yield? Pretty simple. You want something positive. So that's it. A lot of people said and have said and re-say that the U.S. dollar is going to go to negative interest rates. I'm not sure. I have stood my ground pretty much the whole time and said, no, I don't know. I think that the dollar may continue to be the last remaining one that's in a positive interest rate platform because it draws all the suckers in. It's a way to get that free cash that's out there in the debt markets, the bond markets, the credit markets, however you want to refer to them, into the U.S. dollar because, again, it's the only way to get a positive return vis-a-vis many of these other bonds or sovereign currencies. The next one up is from Bloomberg, Biden Budget Challenge Agency that kept predicting deficit doom. And this shows you the 10-year, the benchmark, 10-year Treasury. In red shows the ever-declining yield on it. And now, of course, we've had this pretty big move that people are talking about in the benchmark 10-year. That's come up here very much at the end of the curve here. But what this shows is it's easier to service debt when the interest rates become lower and lower and lower, which has been the case, as this graph shows, going all the way from about 15% interest rates back in 1980 all the way down to like 1% or so in the last year or so. So it's talking about what we all know, or most of us that follow finance, that there's going to be this great economic package for $3 trillion for infrastructure on top of the $1.9 trillion pandemic relief bill earlier this month. So, $5 trillion among friends. Who's counting? So this is really a concern, and you can't spend yourself rich. I'm not against infrastructure. I'm not against a lot of these ideas that purportedly help the economy, but in most cases they do not. And that's the rub. We're at the end of the age. We're at the end of the currency experiment. Basically, the debt that's created can never be repaid because the dollars that have to be used to service the debt don't exist, which means borrowing and borrowing. So it's an exponential function that can't last forever. I've brought this up in the past. So just to further the argument a little bit, this is a website called live-counter.com, as you can see. And at the very top, it says if you'd invested 1/100th of a dollar, which means 1 penny, if you put 1 penny at the time of the birth of Jesus with a compound interest of 5%, it would have a value today of the number of pure gold balls, each the size of the earth shown below. And that is a very large number. What is it? 60,807,698 gold balls the size of the earth. This is how. Asset growth of 1 penny at 5% by years in dollars. After 15 years, it's doubled to 2 cents. 30 years, 4 cents. 7 years, 30 cents. And goes on and on. After 500 years, over 39 billion and a few cents. Now take a ton of gold worth $32,000 per kilo. Goes through the math there. And now the equivalent size of the earth in gold balls shows you the different years and what it would mean. And that makes, and he goes through the whole thing, even Bill Gates would be green with envy. Don't believe it? And here's the formula again, showing you the miracle of compound interest, which of course is really a fallacy. This is why these economic systems come and go. And believe me, with a degree in finance, everything has to do with the present value of money and what the yield is and what the future value will be and why inflation is important and on and on and on. I mean, everything about finance is taught about interest. But we have to really go back to basics and say, well, when you borrow money and the interest doesn't exist to pay off the balance of that debt, then where does it come from? And the answer is you borrow more. So it's in a cycle that never ends until it does. And they always have, and they probably always will, unless you reinvent the system. Really gets down to the question, is usury moral or not? And I'm not going to make that argument today. I just want to point out what happened. I just got off an interview this morning with someone that asked me, is the American people being spendthrifts, it's got us into this problem. That's a summation. It was a more subtle question. I said, no, it's inherent in the system. And most people in finance won't even tell you that. But I'm letting you know. I've done this once before. Thought it bared repeating. So the idea being that you can't compound interest forever. If you do, it's a ridiculous sum that has really no meaning. So this is, over 2,000 years of compounding a penny at 5%. And I know 5% may sound high in today's world, but really, if you look at history, it's really not that high an interest rate. It's more of an average. We've only been in these very low interest rates because money is cheap. Think about that. Money is cheap. If something is cheap, it has a low interest rate. If something's valuable, it usually has a high interest rate. So it's a lot of cheap money. It's done for a reason. It's to allow the interest payments to proceed on the national debt and not collapse the system. But regardless of that, it is collapsing, as I make note almost every week. So with that, remember, there's nothing more powerful than the truth. Be strong enough to speak truth to power. You don't have to be angry about it. You can just say it from a centered place within yourself. And I wish the very best for everybody. I decided just to add on a little bit. So I'm on our YouTube channel, The Morgan Report. 35,000 subscribers, which is nice. Wouldn't mind seeing people kind of send that out occasionally so we get a few more subscribers, but I'm not really that worried about how many subscribers I get. So a lot of the videos are up here as well. But remember, I put this community channel on over here. So this is videos that I think are worth watching. So what I did this week is I put up the Four Horsemen, which makes it very easy to find. You can just go there. It's free. And it's a good documentary about the end of the Age of Empire. Some of these, most of these I don't agree with 100%. Almost everything I do has a basis of getting you to think for yourself, to critically think, to evaluate, the adage that Chris Duane uses, listen to all, follow none. I think that's a good approach. I hope your prophecies, I found this one interesting. The Big Short, we just talked about before. Mike Maloney's one, talked about a moment ago. This one on crop circles, judge for yourself. Very interesting. There was a couple in here that I've noted over the years. I don't follow this very closely, but there are two in particular that really make me stand up to pay attention. And they're in this video. This is, I think, one of the best crop circle reviews of any I've found. That's why I went ahead and posted it here. It's gold and silver price forecasts, looking at the long term, and a bit about inflation. So again, these are basically for a weekend. And the dimming, this is one from Dane Wigington of Geoengineering Watch. Very good argument, well-researched, well-documented. You may or may not agree with it, but I think it's very important to at least get you to think about it. So I'll leave it there. Again, wishing you the very best. Only the truth works. It doesn't have an agenda. I'll be back with you next week.